Tata Elxsi shares jumped over 9% in trading, reaching an intraday high of 5,396.50 rupees, despite posting a decline in quarterly profit. The rally is largely driven by a significant deal win and a strong dividend announcement. Financial summary: net profit, 172.4 crore rupees, down 12% year-on-year. Revenue, 908 crore rupees, mostly flat compared to the same period last year. EBITDA margin, 22.9%. Dividend, 75 rupees per share. Final dividend recommended for FY25. Segment-wise, performance, transportation. Revenue dropped 9.7% quarter-on-quarter due to global trade disruptions and geopolitical uncertainties. Media and telecom fell 6.3% amid client-specific challenges and cautious industry sentiment. Healthcare and life sciences grew by 3.5%, with new client acquisitions and expansion in digital and product engineering services. Key development: a multi-year $100 million deal, the largest in the company's history, was secured in the media and communications segment. This is expected to boost revenue visibility and strengthen the company's position in product engineering services. Analyst outlook: some analysts maintain a cautious view due to earnings underperformance over the last 3 quarters. Price targets have been revised downward by a few major firms, citing continued pressure on revenue and margins. However, sentiment is improving due to the sizable deal win and potential in the healthcare vertical. Conclusion: while earnings were muted, the stock's surge reflects positive market sentiment around the large deal and dividend. Investors should weigh near-term operational challenges against long-term strategic wins and sector growth.